Hello and welcome to this October 19th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we're taking a look at Infosys Technologies, ticker symbol INFY. This is about a $39.25 billion technology company, so a very large company. INFY, the main reason we wanted to highlight this one today is we get a lot of questions asking us, when should we sell a stock? When do we see, what types of technical developments would encourage you to sell a stock? And the negative divergence is probably one that grabs my attention as much as anything, because normally what you'll see is as prices move higher, you'll see the MACD continue to move up. At some point, you'll print a high in which the MACD is actually rolled over and is no longer printing highs. And you might look at this and say, well, what do these lines mean? That doesn't really make any sense to me. Okay, prices are going up, this line goes down, that means I should sell. Well, you have to understand what these lines mean. The MACD, this thick black line, plots the difference between the 12-day exponential moving average and the 26-day exponential moving average. So normally what you would expect is as prices move higher, that shorter term moving average, the 12-day moving average, should be moving up much quicker than the 26-day moving average, because it should be affected more by current prices. There's only 12 days in a 12-day moving average, where there's 26 days in that longer moving average. So normally what you'll see is as prices are moving higher, normally you're going to see the MACD moving higher. Well, after a period of time, you start to see slowing momentum in a stock. You've probably heard the old saying, trees don't grow to the sky. Well, that's really what takes place here. You get a stock that makes a huge move like this, and it just doesn't always grow to the sky. In fact, it rarely grows to the sky. So what you're doing is, if you're fortunate enough to be in a stock that's making a move like this, and you tend to hold a little bit, but you get nervous after you've got a pretty nice profit, start looking for these negative divergences, because they do give you a pretty good indication of slowing momentum. It doesn't mean you have to sell the whole thing. If you're uncomfortable taking the whole thing off the table because you like the company, consider selling a portion. And if that stock makes a key retracement to a support level, think about adding that position that you sold back in, so you reestablish your full position. Take a look back in April. You can see here that the MACD, as the price moved up, we saw new highs in Infosys INFY back in April. See how it took out the March high? But notice the MACD had rolled over and it actually was coming down. So again, that was an indication of slowing momentum. And look what happened to the stock afterwards. Now, it doesn't always lead to a big sell-off. It can just be a small sell-off. What we look for is a 50-day test. And normally what will happen is, as a stock comes back to test its 50-day, you'll get the MACD coming back to the center line. And then you go from there. Many times the stock will bounce off the 50 and then start to move higher. Occasionally you'll have the breakdown. And if you have a breakdown, then you've got a whole different stock on your hands until the technicals turn around. So that's something to keep in mind. Now, the breakout that we saw back in September, you can see, came above the June high at about $64. We ran all the way up to 72, got the negative divergence in play, and now potentially could come back to the 50-day moving average, which would be also at this price support level down near $64. So that's something to look for. However, in the near term, there is some support that you've got to keep an eye on with INFY. You've got gap support. You can see we gapped up on the first trading day of October on very heavy volume. So as we come back down, gap support, you're going to have folks buying at that gap support level. Also, you've got the 20-day moving average, which is at 68.04, and that's been tested here over the last couple days. So those two provide a pretty key short-term support zone. If we break below that and the volume is pretty decent, then that's when I would expect that we have a much better shot to get back down to 64. Now, if we turn off the 20 here and we go back up near 72, and that divergence is still weak, that would be another sell signal. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestedCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.